Hello guys, this is ObaFX. Welcome to my YouTube channel, your number one channel for tips on how to trade derivative synthetic indices. So, as part of our top-down analysis series for the different synthetic indices, um, I'll be looking at two of these indices quickly, and this will be the jump 10 index and the jump 25 index. As for those of us that are following derivative synthesis, these were added to the original indices in 2021. So without wasting much time, I'll try my best to keep this video as short as possible. So jump 10 index, as is customary, okay, what I'll be doing now, first of all, analyze this for those that swing trade because that's what I mainly do. And then I'll clear the charts and do an analysis for those that probably day trade or scalp and that probably trade using more of the lower time frame. So without much ado, let's dive into it. So even from the monthly time frame before us, we can infer that jump 10 index has been in a downtrend for a very long time now, but something is happening in the sense that we're sensing like what could be either a reversal or a retracement, but let's dive into it to find out. So, from what we can start with, the direction we can say is a downtrend. Why? Because we have it's making a series of lower lows and lower highs. So the buyers pushed the market down to make a low, came back up to give a lower high, then downwards to give us a lower low, lower high, lower low, then a lower high. But something interesting happened here. This lower high, let me use something else. This lower high was taken out. So sticking out. Now, how do I mean? Let me use the line chart for us to see it properly. Now, this lower high was formed. So, so the market was supposed to reject from here to give another low, which would have made it a lower low for the downtrend to continue. But buyers probably came into the market, pushed, and took out this lower high. But the fact that this lower high was taken out and a high was formed, a high was formed, didn't automatically mean that the market trend changed, though there was a bit of like a change in the character of the market from its consecutive lower lows and lower highs. But that doesn't automatically mean that the trend of the market changed because we say that for you to have a trend, you have to have consecutive lower lows and lower highs for a downtrend and consecutive higher highs and higher lows for an uptrend. So in this case, the buyers could not form, though this was a high, it formed like a lower high here. Okay, this was a high. It tried to form like a higher low, but it couldn't push it upwards. This couldn't go upwards to form a higher high. So we had a high, a higher low, but we couldn't get a higher high. So the uptrend failed to form. So now having known that, that's just to clarify that the trend of the market never changed. Even if the buyers tried to change the trend of the market, it never did. So having that in mind, we've established that the market direction for jump 10 index is a downtrend. Albeit another information that we can pick from looking at this monthly time frame is that the market is currently at its lowest point. Now, when I mean its lowest point, the market has never gotten beyond this present support that we have, and it is also currently being rejected. So let's look at what we can find out from the weekly time frame. Let me zoom this out. So now from the weekly time frame, we can see that the market is still being rejected from this support. But aside from that, there isn't much that we can get from here that we haven't already talked about in the monthly time frame. In other words, the information we're getting here is something that we already talked about when we looked at the monthly time frame, that the market is still making consecutive lower lows and lower highs. So like I told us, we get our direction from the monthly, our structure that will be trading from the weekly or daily time frame. So let's see if we can get anything from the daily time frame. Now, from the daily time frame, we can see we can see that there's a particular pattern here that has formed, and that's the M pattern. So, and just like I said in my previous video, to trade the M pattern, all you have to do is to pick the key points of interest, which I stated earlier are this and this. So in other words, when you have an M pattern, the market is likely to make a retracement either into the zone or upwards into the zone to form a double top before it starts coming back. So if the market takes out this zone, then it is telling us that it wants to change from this downtrend to an uptrend. So let's see exactly what we have before us. So if I'm to inculcate a trend line, so let's say I decide to add a trend line to this market. So we can see that the candlesticks are touching the trend line beautifully. But these ought to be the key points of my M structure. This and the middle of the M. But we'll have to take this particular one out because price has already invalidated it, in the sense that it just breezed past it. But currently, price is at our key point of interest. How do I mean? Because there are two confluences here straight away. Price is currently touching our trend line, and it is also touching a key point in our M-shaped pattern. So these are M-shaped pattern, this, and this. And just like I stated earlier, this is a key point in this M pattern. This is a key point in this pattern. Now, I had explained before that the key point of interest in any structure or chart pattern is that area of the pattern where if you take, if you have, if you are patient enough to find trading or entry opportunities from those areas, you optimize your chances of making profits. So now that on this daily time frame, we've already seen that price is in our key point, as is at our key point of interest, we can now go to one of our entry time frames. So like I said, for swing trading, I take my entries on either the H4 or the H1. So there are certain other things I'll look out for, like candlestick patterns and all that, but I won't be dwelling much on that. So one of the entries that I talked about initially, that I talked about in one of the previous top-down analysis, is the use of a counter trend line. So if I'm to refine this key zone here, we can see that what we have here would be like a resistance zone coinciding with the trend line. How do I mean? Price came here, not just a resistance zone, it acted as a support before, but was broken and now acted as what? A resistance. Price was rejected here. Downwards, boom. It came back, and now we can see that from this doji candlestick, it is also being what? Rejected. However, for me to enter a trade, I wouldn't just do it because price is currently at this key zone. All I would do would be to add what? A counter trend line. So this counter trend line is telling us that even though we're in a general downtrend, but that currently buyers are in control of this meaning trend. In other words, we can see that price is making higher highs and what? Higher lows. So until this trend changes, so I would only enter a trade if price does this. If price comes back down to break this meaning support. So let me see. So if price does this, comes down, breaks this trend line, break this mini support, then a retracement, then I'll enter my trade. Then my stop loss could be either here or here, as the case may be. So that will be my entry for um, jump 10 in there. So this is like something that you can monitor closely this week and find trading opportunities. So if I'm to refine this further, can just come to the H1 time frame, I can see that the trend now is even clearer. So higher high, higher low. It's ranged a bit here, formed another high, higher low. So we can't take a sell in this place. And I wouldn't want to buy this market because we've already seen that the market is in a strong downtrend, except the market breaks this trend line completely and then makes a retest, then we can start looking for buy opportunities because then there have been like an indication that the trend of the market had what changed. But in this case, we have to wait for the market to break this counter trend line, make a retracement or a retest of the trend line or of this meaning support zone, which will now be acting in that case as a resistance, and then we'll take our sell trade downwards. So so let me take out everything, and that I think that's basically it for jump 10 index. That's basically it for jump 10 index. So let's look at jump 25. Let me take these guys out. So for jump 25, let's go to the monthly time frame. Now from the monthly time frame, we can see that from when this pair was added, the market was very choppy initially. Now, sorry, I said choppy initially. In other words, even when it was ranging for a long time, the range wasn't even beautiful to look upon. It wasn't clear or well defined. Market was just going up and down, and a lot of people lost money trying to trade this because once the market is not trending, it becomes difficult to tell where it's going. So, like I said, jump 25 index ranged for a very long time. So each candlestick here stands for a month. So from 2021 till this, from 2021 till from May 2021 till November 2023. So that was for almost 2 years. It just kept ranging. It kept ranging. And then finally, it broke out of the range and came down to form like a low. So now a lot of us would have thought that, oh, now that it formed a low, it would simply form like a lower high and then go ahead to form a lower low. But lo and behold, what happened? The market came back to the initial support of the range, which now became like a resistance. Got there, there was a rejection initially, this red candlestick, but unfortunately, instead of it going ahead to continue with this trend, maybe like just hit this trend line and then continue downwards, it came back up, broke the trend line, broke back into the range, and even went ahead to take out the initial resistance or the original resistance of the range. Now, all I'm trying to say is that currently Jump 25 index is in a strong bullish trend. Now you can look at all these candles. So for 1, 2, 3, 4, 5, 6, 7, 8, 9 months, or 8 months as the case may be, because we just entered the new month. For the past 8 months, Jump 10 index, Jump 25 index has been in a strong uptrend. So we've gotten our direction from the monthly time frame. So let's look at what the weekly time frame has for us. Let me take this guy out. So from the weekly time frame, we can see that even the direction becomes a bit clearer. That means now we can add like a trend line. So one thing we can see from the weekly time frame is that the the price is currently sitting on the trend line. So we have a high, a higher low, market ranged here for a bit, then give a higher high, ranged a bit, higher high, and then higher high, give us a higher low. But if we notice something, we can see that the market is currently ranging. Now, why will I say that? You can see these candles for the past 1, 2, 3, 4, 5, 6, 7, 8 weeks. The market has been here. It has not been able to go above this resistance, neither has it been able to go below this support. So to make this bigger, we can now come to the daily time frame. So I think this is a bit clearer. So even though the market has been in a strong uptrend for a very long time, but the market currently is ranging. And we say that when you are trading a ranging market, you sell at the top and then you buy at the bottom of the range. I'll say that again, you sell at the top and you buy at the bottom of the range. However, if you're not that experienced, it is better you stick with trading what trending markets. Now, how would I approach this? First of all, the market is sitting on a trend line. And if we look at the range, the ranging market, the market is currently also at the support part of the range, which means I would be looking for buying opportunity because my trend line is supporting my price is currently on my trend line and also as an added confluence on a major support for the ranging market. So what do we do then? We can now go to the H4 to see what price is doing. So now most people, once they see this, the market for how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9. For the past 36 hours, because each candle here represents 4 hours, the market has been rejected by this base 1, 2, 3, for. So a lot of people would just, especially those with big price and big trading accounts, you can take you can take um, you can take your buy trade here, even as this market is here now, and then you place your stop loss here. Why? Because this has proven in time past to be a very, very strong support. So our confluence is telling us that this market is on a major trend line. Remember that this trend line is from the weekly time frame. So it's a very strong trend line, supported also in the daily time frame. And we have also our support from the daily time frame, which form the range. Now, why I'll be confident in taking my trade here, even as it is now for a swing trade. Now, remember, I'm talking about those who swing trade, is because would be because the market initially is in an uptrend. So if it were maybe an opportunity to sell, I wouldn't have been as confident as I would be in taking a buy because the market is in an uptrend. The price is currently on my trend line drawn from the weekly time frame. And then also we have like a major, major, major support, which albeit is part of the range. But to refine this entry, I can as well go to the daily time frame. And remember, I had spoken before about counter trend line. So if you want to trade this aggressively, you can take your trade here because of the several rejections that you've seen here and place your stop loss here. Or if you want to be conservative, you can place a counter trend line here. Place a counter trend line here. This is the first one. There's an internal one here. You can place a counter trend line and you tell yourself this is the first touch, the second touch, that if on the third touch, this trend line breaks and maybe there's a pullback, then you can start buying. But I'll be taking this trade because of this particular confluence. So that's that for the top-down analysis of the jump 10 index and jump 25 index. So like I would always plead, if you've gained anything from this channel or you feel that it's a place where you can always come back to learn one or two tips on how to trade derivative synthetic indices, then I would say that it would only be fair to both of us if you would like this video, share, and subscribe so that when I drop subsequent videos, you get a notification on your device. So thanks a lot for making out time to watch this. Cheers.